All right, traders, good day. Mic is clear. Screen is not blue. Both good, both good, both good. Okay. Welcome, welcome, welcome. Happy Wednesday to you, traders. Welcome back to the live room. Exciting day for me. Yesterday was a good day. Took my kid roller skating for the first time, which was new and interesting. He was a lot less. He was much more fearless than I was. Now, I can roller skate. Don't get me wrong. Not like super good, but I can do it. But it hit me as soon as I put the skates on that I forgot that I tore my MCL last year, and that I have roller skating and stuff like skiing or snowboarding. I'm not sure how that works with that. So it kind of hit me last minute. Like as soon as I got out there, I'm like, wait a minute, this may not be a good idea. But it was too late. So especially when you're trying to, imagine holding up a kid. He's slipping and sliding all over the place. So he's, you can get in a lot of awkward positions, and you tear those things when you're kind of your knee and joints move differently. It's the locked in part that kills it. That's why you see a lot of athletes now tearing MCLs and ACLs because they're wearing these ankle braces to protect their ankles from rolling. But now because their ankles are so kind of stuck and glued in, right? There's no give, and it goes straight to the knee. So I was pretty scared. I didn't want to be that guy screaming in pain and crying on the middle of a skating rink while everyone points and laughs. But he survived. I survived. It was all good. Jamaica advanced in the Gold Cup, which I am happy about. Still trying to figure out if I want to catch the U.S. play down in Philly next Sunday. I suppose it depends on what time they play. But it was a good day. Oh, made some money in the market. Made some money in the market as well in typical Keel fashion. 2 trades, 1 win, 1 loss. Currently in one right now. So a busy trading week per 2019. But all of that is overshadowed by George. Right? All of my greatness is overshadowed by George and his 200 pip week. Congratulations. Congratulations. We were talking on the chat yesterday, and it made me bring up a really good point. Where one of the trades George was in the pound dollar, and it had spiked up. I think it had come 1 pip, 1 pip before stopping you out, George. Is that correct? Or like a few pips, right there, before reversing and going in his direction. And you'll often hear me talk about something called the graceful exit. Is that a familiar term for you guys? Obviously, if you guys are brand new, you don't know of it. Welcome, by the way. I know we have a few new members in here. But for you guys that have been with me for a while, are you familiar with the graceful exit technique? At least what it is. All right, so the graceful exit is essentially the opposite. It is moving stops. It's once the market tells you that you're wrong, you try to get out of the trade and kind of save your bacon. I'll give a good example here on just bring up the pound dollar. Graceful exit. So here's the trade that George took yesterday. It was a double top wasn't right here yesterday, right? And price action, I think it was on the 60, so let's go down to the 60. And price action broke. The one stop was on the pound yen. Okay, gotcha. Thought it was on the pound dollar. Either way, this will still work on the pound dollar though, just for giving an example of graceful exit. But there was a double top here. And let's say you entered the double top. This is one we talked about yesterday. And you see that price has broken and closed above that level, right? So what happens? A break and close above a double top tells you what about your trading opportunity, just from our basic rules of reading price. Again, let's pretend you entered right here, and market broke and closed above it. It means that there's a violation, right? Your double top has been violated, which is your reason for getting short in the first place. Once your reason for getting short in the first place is violated, you're probably assuming that you're going to win or lose. Which one? Probably assuming that you're going to lose. So let's say your stops were right up here, right? Let's say that price rallies up, doesn't quite stop you out, and then starts to come back down, right? Now, this would also look like a trend continuation opportunity. So what you would do here is you would say, you know what? The trading opportunity is wrong. The market has showed me that. However, instead of taking me out for 50 pips, it reversed right before my stop loss, and it has given me an opportunity to get out for break even. And a graceful exit basically means I'm going to get out for break even, or I'm going to get out for minus 10. Basically, I'm going to get out of the trade. A trade where the market says I'm wrong, I'm going to get out of it for less than what I would have been stopped out of it. Basically, kind of just like, hey, I'm going to take my medicine and call it a day. Does that make sense? You're saying I'm wrong in the trade. I'd much rather lose 10 pips than 50 pips. I can accept the loss. And it's not a bad technique to use as far as like trade management, because you're, again, by all means, the market is telling you that you're wrong and you're saving a little bit of money. However, the problem is when it rolls back over and hits your would-be targets. And can you imagine how that makes you feel, right? How would you guys feel in a situation like that, where you're in a trade, you get out for either break even or a little bit of a loss, and then the market goes and does exactly what you thought it would do? Yeah, for many of you, it's going to suck. Now, for some people, it's okay. For some people, you're saying, hey, you know what? Akil, technically based, I did the right decision, and that's okay. And that's what we talk about when you have to find your personality as a trader. Some of you can handle that. Some of you can be perfectly fine with saying, hey, I will take my minus 10 because it's better than minus 50, and by all means, I should have been out for minus 50. Others are like, oh man, I knew I was right, and this is going to stick with you. So when I tried implementing the graceful exit technique, because I was someone that was really big on money management, right? Over my years, I learned that, hey, I'm not necessarily going to get that much better as a trader as far as like pinpointing opportunities. Don't get me wrong, you do get better with that, but I found out that the real gem of trading comes in risk management, right? How can I keep my losses as small as possible? Stuff like that. So I was on this big risk management thing where I was like, okay, let's use this to elevate my trading. And I tried it out for a little bit. And what I noticed is that personality wise, it just didn't fit with me. I would get so upset over situations like this where I did the right analysis. I made the right call. I made the right entry. I had my stops in the right place because, again, they weren't stopped out. I did everything right, but I didn't have a chance to see the end result because I in my mind, I took myself out early. I guess per rule, I took myself out at the right place. It bothered me. It bothered me to do all that work and see no result. And it was something that would stick with me from trade after trade. And I just knew that it wasn't a fit. Eventually, it was going to lead to me making mistakes. So it just wasn't a strategy or a technique, whatever you want to call it, that fit with me. But this is a good example of what would typically happen when I would use it. Now, I'm not saying it's bad by any means. It's really good. Any way you can reduce risk is great. Obviously, you want to have a rules-based way of doing it. But like any trading strategy, you want to make sure it fits with your personality, right? Don't be a counter trend trader if you believe the trend is your friend, right? Don't be a trend continuation trader or trend following trader if you believe heavily in the power of support and resistance, or adapt the way you follow trends. I think that's the most important thing you do as a trader is fit your trading to your personality, fit your trading to your philosophy. It's going to eliminate the internal battles that you have with yourself. Nick says, I've learned to make it okay in that sense, but somewhere deep inside it stinks. Ale says, Coach, I'm a bit confused. I thought that the higher time frame is always important. So like in this example, when you get a double top on the 240, but it's violated on the 60, does that make it invalid? No, we're talking about a double top on the 60 here. I was just on the wrong chart. We're talking about a double top on the 60, yeah. But you could say this. I mean, if someone has rules that say I trail on a lower time frame, they can still look at that as a violation. Structure was violated, yeah. But brought back all those graceful exit memories. All those graceful exit memories. All right. What else I want to talk about? Yeah, so 1 for 1 yesterday. Not bad. Made some profit. But the theme of the year still remains. I'm not hitting target twos. I don't know how many of you guys are pattern traders. There's 2 things I'm not doing in my trading at this halfway point. I'm not hitting target twos at a high enough rate. I don't have any home run trades. Now, the home run trades is expected because aside from really the pound pair, we haven't seen pound pairs. We haven't seen a lot of directional movement. Typically, my home run trades come from trend continuation trades where we see a lot of directional movement. We've had that with the pound. I just haven't had any opportunities to get any long-term shorts on the pound pairs. So that's not as big of a deal. That kind of comes with the market territory. But I'm not hitting target twos, and that is a major problem because I like to say this: target ones essentially make up for your losses, right? We all know that if you're trading multiple positions, when you take a loss, you take a loss on how many of those positions, right? We did a Q&A session, a lesson on different risk management and position sizing tactics on Monday, right? If you guys remember that. Remember, if you're calculating your risk, right? If you're trading a 2-unit trade, right? Meaning you're shooting for 2 targets. When you get stopped out, how many units are you getting stopped out on? Both, right? When you hit target 1, if you're trading a 2-unit trade, when you hit target 1, how many units are you taking profit on? 1, right? So, unless you're trading with an extremely good risk reward, it's going to be very hard for a half a position, or if you're winning at a very high rate, that works as well. But it's going to be very hard for a half a position to consistently make up for a loss of a full position, especially with stuff with advanced pattern formations, because advanced pattern formations don't have a very high win rate. Obviously, depending on what you say is high. High for some, not high for others. So I always think of target ones as making up for losses. But the target twos are the ones that really take your equity curve to the next level. So you're in this consistent thing of this consistent pattern of you lose some, you have a target one winner, it makes up for it, you're back to break even, maybe a little bit in profit. You lose some, right? I'll draw it out on the chart actually. Something like this, right? Win a little bit, you take a loss, you have a target one winner, makes up back to break even a little bit, right? You lose a little bit, target one winner makes up for it back to break even, right? Lose a little bit, target one winner makes up for it back to break even. Lose a little bit, target 1 and 2 winner, and then kind of this, right? Typical equity curve, right? The target 2 winners gives you those, or the home run trades give you those bigger boosts in your equity curve, which allow you to go in the right direction. But when you don't have that, your equity curve is hopefully still going in a positive direction, but very slowly. The slope is very low. And that's been this year. Now, part of it is, again, not as many trading opportunities as this year. That makes every trading opportunity that you do take more important. And that's due from the lack of volatility in the market. But at this point, I just took down my spreadsheet, so I'll have to look at the the stats later. At this point, my target ones are outperforming my target twos. And what that means is I'm collecting more profit on the first half of my position than the second half of my position, which tells me what? What conclusion can I make from this? We always talk about continuously evaluating your trading, whether you're a systems trader or, or like mechanical system trader or a discretionary trader. You have to evaluate it. People think even automated trader just make a system and let it go. Nope, you got to evaluate it. Yeah, it means that I am wasting money by taking target twos. It means trade harder. Yeah, don't trade smarter, trade harder. Would you guys agree? It means like I'm wasting money by taking target twos. So I've got a very interesting decision to make within the next 4 days. June is the end of the second quarter for me. I can make adjustments to my trading plan quarterly. I'm going to have to make a decision whether target twos are going to be thrown out the water or are they going to be kept in. I can tell you what, I dealt with this back in 2014, same exact scenario, same exact month. So it's going to be a little bit easier of a decision this time around just because I have a track record, an example of doing it before. But this is a good example of always kind of staying flexible in your trading. Treating it like a business, treating it like a coach, right? Making adjustments. That was the other positive thing. Everton signed Gomez, which was massive. Happy about that. But always making adjustments. Always making adjustments. Ale says, what about if during the summer we get more volatility and target twos start working again? Big if, because guess what? We never know. So the question is this: how long are you willing to stay with something? How long are you willing to stay with something hoping that it works? How long do you give yourself? Do you make it and say you can take the example for any part of your strategy. Do you give it a day? Probably more than a day. Do you give it a week? Do you give it a month? Do you get 7 years? Do you give it 6 months? Right? Something that you need to know is what is your time limit for making decisions? Now I already told you my time limits, right? When am I only allowed to make adjustments? Every 3 months. Again, I'm a big quarter person. It comes from my stock investment days. It comes from being an athlete. I just think a quarter, 3 months is a good enough sample size to kind of get rid of to show what trends are. I think you can BS and get away with randomness in a day. You can have randomness and be lucky for a month. I think 3 months is a good tell of what's actually happening. And obviously, it depends on your trading style. So what I typically do in my evaluation is I evaluate every 3 months. I do a big evaluation every 3 months. I try not to make decisions after 3 months, but I put things on my watch list. So back in March, you notice something and you say, I need to keep an eye on this for the next 3 months. Let's just make sure, let's see if it's an anomaly or if it's something that's actually happening. And you put it on your watch list. And if it continues for the next 3 months, that's when I'll typically make a decision on it. Now, obviously, what the decision is depends. Last year I got hammered on the pound dollar, and I had no intentions of making any changes on that. What pairs I trade is a little bit different because those have those can have bad years. A pair can have a bad year. That's normal. I've seen that in my testing. But yeah, that's a question you need to ask yourself. How much time is enough for you to make a decision? Are you willing to keep sitting it out in hopes of it turning around? Or do you need to make an adjustment to save your trading? And it's very, very similar to a sport, right? How many of you guys have watched a sporting match and you see a player struggling out there and it's one of your better players and you're like, man, the manager should pull him right away. But this guy's got a good track record. He's got a history of being good. They leave him in there, but he's clearly struggling. When do you make that call? When do you make that call to switch him out? Because even the greatest players have bad days, right? Even the greatest players have bad days. And soccer's an example because you can't go back in. But when do you make the call? Do you take him out at halftime? Do you give him till 60? Do you wait till 80? You wait too late, guess what might happen? You wait too late, the game may be out of hand. You do it too early, right? He may just be in a little bit of a funk for the beginning of the game and bounce back to normal, right? That's the job of being a manager. We are managers, guys. But instead of managing a team, right, we're managing the markets. Jason Greystone said it best, right? The pairs are our employees. There are athletes. And we have to make those decisions. Real quick, there's some other, Nick says, you can use a sub account and trade 50-50 each style so you can spread the risk. You can, but then you'd have to use a separate account, which it would still be inefficient. I don't think that's a great solution. You could, if you have a separate account just laying around that you can use. But if you have to split your main account, I don't think it's a very efficient way to do it. George said, this is the risk you take. Ale says, what about during, already, what if we're going back to that question, Ale. What if during the summer we get more volatility and target 2 start working again? Well, something you would do is, when you're making this adjustment, this rule change isn't necessarily forever. This rule change is until the volatility comes back. Or until your whatever you change starts performing at a normal rate again, I should say. So you're not making a say, oh, I'm done, no target 2s forever. Right? That's not the case. You may add them back again, but only when the market says it's best suited to. So technically, I could add them back in September. Yeah, that's my next quarterly mark. Is there an overall volatility measurement tool for FX? Knowing that trend can also help this situation. The price chart. The best way to tell volatility: look at the price chart. You look at your ATRs, your average true ranges. That's gonna tell you that's gonna give you a comparison. So you can look at the average true range on the daily of this year versus, a couple years ago. If we can take a look at that right now if you want. Let's take come on, get out of here. Let's take the pound dollar real quick. Let's just go to a daily chart in the pound dollar and we can look at this year. We're looking at about 80 for an ATR. Right, you go back to last year. We can take the same time last year. Last year was about, let's see what it is this last year, about 90s, 111. Year before, where's that going to be at? 111s, 138s. So you can see it's a little down there. Yeah, but ATR is typically what I use. I mean, I obviously I'm in the markets every day, so I can just tell by the movement. But if you want a true ATR, will tell you the average range of the market movement per day. When that average range is lower, that's going to be your less volatility. So, good way to start the room. Any questions about that? We do have Trump. We have some news. I flashed the Forex Factory on your radar today. There wasn't too much major news coming out, but Trump is going to be doing an interview at about 8:15. That's not listed here. So if he touches on any of this trade war and China stuff, we may see some movement in the markets. That's not listed here. We have core durable goods at 8:30. Trump will be doing an interview on Fox, I believe, at 8:15. So if we see some bonkerish movement in the market, That is why. All right. So we might as well start on pound dollar since we're here. Pound dollar on the daily. We saw a bigger picture. You guys know how I feel about this. We got the head and shoulders that I'm not interested in because of that silly candle looking left. We did come to the neckline. We saw a retracement at the neckline. And we actually bounced down to a level that I thought we'd see a reaction at, right? You can see this beautiful white box that we drew in yesterday. That is where we thought the market would react at, and we have. Now, there's no opportunity for me to trade here. So from a personal trading perspective, I don't have any interest at this level. But if you're looking for longs, this would be a level to look for longs at with an anticipation of a move higher. If we break this level, we can look for an anticipation of a move down to the $1.26 to 126 even handle here on the pound dollar. Let's head down to the 60-minute chart. Heading down to the 60 here on pound dollar. Again, you can see market coming into previous structure support, looking left. Could be putting in, not a great looking one, but a head and shoulders type of pattern here if we get a little bit of a retracement up. And again, we end up breaking that neckline. And again, that would set you up for the potential shorts down to 126. Let's head down to the 15-minute chart. Excuse me. 15-minute chart. Nothing much here. Could have possibly made the case for a smaller cipher this morning, it looks like. X to A, A to B, B to C, C to D up there. And then down on the 5-minute, we've got this. Any questions on pound dollar? No. Let's go over to euro dollar next. I want to keep an eye on pound yen. I'm going the wrong way. Let's go to euro dollar next. Can I be your euro, baby? Euro dollar, we're at 28 minutes. Euro dollar. Take a quick look at the daily before we pop down. By the way, if you guys are new, we do day trading and swing trading analysis here in the live room. It kind of flows seamlessly because I'm really good at what I do. But we always take a look at the daily time frames, daily in the 4-hour and 60-minute for more of the swing trading time frame, so a longer term perspective, and then also down to the 15 to 5, the range bar charts for a day trading perspective. And the goal here is to just walk you through the markets, show you how we do analysis. If you're brand new, don't get overwhelmed. Don't feel bad or frustrated. Most of the traders in the room here are premium members. They have gone through the course. They understand the material. And this is a chance for them to practically apply what they're learning to the market. So they're familiar with the terminology. If you're not familiar with the terminology, it may be a little confusing for you, but that's just because you haven't learned it yet. So sit back, observe, focus on what you know. If you're someone that's only on the foundation course and you haven't gotten into anything mastery like Fibonacci's or patterns, and just focus on what you know. Focus on candlestick formations. Focus on support and resistance. Focus on trend identification, stuff like that. And then as you progress through the course, it's going to add tools to your arsenal of what you can focus on. But also feel free to ask questions. If something doesn't make sense, don't just hide and be like, oh, I'm scared to ask because people are going to make fun of me. No, type it in. Nobody in here bites. If Gabby comes in, maybe she does. But feel free to type in your questions, yeah. All right, euro dollar on the... Let's recap. We had the higher close. We came up to a previous level of structure high. We put in, you can't see it now because all my funny looking drawings are on the chart. But we put in an ascending channel, a rising channel. we were traced off of that right back down into previous structure lows. So as Todd Brown would say, we're stuck like Chuck right now, right? We're trading in between previous structure support and previous structure resistance. Basically, this line right here is support. This yellow line up here is resistance. We're trading right in the middle of that. So we may expect some consolidation here. If you're expecting consolidation, you may want to be on alert for advanced pattern formations. But very similar to pound dollar, where we're at a location where not too interested in getting long, not too interested in getting short from this area either. So it's really a wait and see. If you get a double top, could give you a different reason, but we'd have to see a retracement further up first. Davis says, question, Akil, are the markets have been seemingly slow this year. Is it normal as in going through a cycle or unusual? It's normal. Yeah, the market, I've experienced very fast markets, very slow markets, very markets that consolidate, markets that trend. So it's just the market has different moods. And this year has just been a slow year. I keep referencing 2014. 2014 was the last extremely slow year that I remember. Now, I haven't seen anything like 2000. I got started at a weird point, the recession, so that's kind of its own little deal. But yeah, it's normal. It's normal in the fact that it happens. It's normal in the fact that it happens. But I'm a believer in that the markets are always changing. Always expect the unexpected. And you just have to adjust, and that's the difference between good traders and bad traders. Bad traders they don't make adjustments. They think that everything will work exactly the same forever. Where good traders, they understand how to read the market. They understand how to know the story that they're being told, and they're able to adjust their trading style with the market conditions. So yeah, very slow year. I agree. Very slow year, but I wouldn't call it not normal. But just because there really is no normal. Davis, I did 6 years of back testing and noticed opportunities slowed this year. Yeah. Again, this has been my opportunity. I've taken about half of the opportunities I typically take this year. So I don't know what my number's at right now, but usually at this point I have double of what I've taken. And a lot of that is just due to the reduction in volatility. There are a lot of day trading opportunities that I can't take because just there's not profit available. Yeah. So it's not normal in the sense of what is typically happening, but it's normal in the sense that the market goes through these stages. Yeah. I also expect a faster summer. Summer is usually ridiculously slow. Not necessarily bad, but slow. I expect a faster summer. We have a lot going on. I think we're going to see some movement this summer. We have a lot going on out in the fundamental world. So I'm expecting a fast summer. Fast being a relative term, of course. Euro dollar into 60. And I'll tell you what, just on the subject, this is why it's important that you don't just test 1 year, guys. This is why it's important you just don't test what happened last year in the market, and if your strategy works, you think it's going to work that way forever. You need to test over different market conditions. Because if you are a trend following trader, you have a trend trading strategy, and you have some very directional markets, how do you think your strategy is going to perform? Yeah, it's going to perform really, really well. If you're a trend trader and the markets are directional and they're booming, you're going to perform very, very well. Why? Because the markets are rolling. So if you've tested a single year and that single year happened to be a very trending year, your backtesting numbers aren't going to tell the true story. And that's a problem that so many people don't, well, most people don't go through the backtesting process to begin with. That's an issue in its own right, right? Most people don't backtest to begin with, but many people will backtest, but not backtest enough. They'll backtest enough just to make themselves feel good, right? They'll backtest, a couple months and be like, the numbers look good. Let's get at it. And then they're smacked in the face with the harsh reality of trading that things aren't always that way. So those who, some backtesting is always better than none backtesting. But you got to backtest through different market conditions. You have to, and this is what pisses me off, right? Because, we had this conversation a while ago about, I did a few podcasts on people talking about backtesting is pointless. Right? You should backtesting is pointless because it's not the same thing as live trading. And you're right. It's not the same thing as live trading, right? In live trading, you have something in front of you called the hard right edge, right? You see the right side of your chart, right? What do you see on the right side of my chart? Empty black space, right? You're looking off the cliff, there's a mist, and you have no idea what's down there. That's scary as hell, man. It is a lot easier to identify when you're backtesting when you know what's happening, right? When you're looking back and you're like, oh, look, I can go back, right? So from an analysis perspective, right, backtesting is different. It is different, right? It's easier when you have that safety net of being able to scroll back. It's hard to trade live when you have this open space, this unknown. It makes your mind start to wonder, and the mind can do some weird things. Same thing with demo trading. Demo trading is completely different than backtesting. Demo trading is completely different than live trading because there's no emotional attachment in demo trade, right? You ever get mad when you lose a demo trade? Like really mad? Probably not because, you didn't lose any money. You may get upset like, oh, it didn't work out, but you don't actually lose any money. When you lose live money, it's a different story, right? Money is a massive emotional trigger. Losing live money is much different than losing demo money, right? But for these people that say you don't need the backtest, you should just trade it live and learn on the fly, right? Well, how the hell do you know if it works? How do you know if it works if you don't backtest it? How do you know what you're doing now is going to work 6 years from now? What if you started trading the perfect strategy at the perfect time? And it's working great for you for the first year because you've caught a trendy market. And guess what? It's like the stock market, right? When the stock market's trending, right? You can just buy anything at any given time and you'll make money. There's no skill involved. Just buy anything at any given time, and you'll make money, right? long term. But the thing is, most people aren't in trading for the short term. You guys are in it as a long-term investment, whether it's managing your own finances and trying to beat the bank like Gabby, whether it's developing a business, right? It's a long-term goal. It's a marathon, right? You can't just sprint out in front and die for the last 25 miles. Right? You've got to be able to maintain throughout the entire thing. And let me ask you this. Any of you guys ran a marathon? Am I the only idiot that did it twice? Not a chance. Well, I can tell you what, right? There's a point in a marathon where your body just gives up, right? For me, it happens at mile 12 or mile 16 every time. Mile 16 every time, right? My first marathon, I never trained. I think the longest run I did was like a 10-mile run, right? So I had no idea what it felt like to run more than 10 miles. How do you think my body reacted after 10 miles? Do you think it was good? No. It started to feel a little different, but more importantly, I didn't know how to manage it. Right? Physically is one thing. You're gonna die and feel pain. That's part of it. But mentally, I didn't know how to manage it. What is this? What is this cramping feeling? What is this tiredness? What is this mental fatigue of being out for 2 hours? However, once you've gone through it, right? Once you've gone through your first marathon, right? When I did my second one, I approached it completely different. Now, my body still gave up on me, don't get me wrong. But mentally, I knew how to deal with it. I approached it differently. I knew what adjustments to make when my body was telling me those signs, right? I knew that when my body felt like this, I had to change up the cadence so I don't cramp up. I knew when I can surge a little bit and pick up the pace. I knew when I had to slow down and get more oxygen in, right? You can make those adjustments with experience. And there's only 2 ways to gain experience in market, in trading. 3 ways, I guess. 1, you can just trade live from right now and you get hands-on experience as you go. Spend the next 5 years gaining experience in the market. You may not make it 5 years, you may go broke, but you can go for it. Or you can back test. You can go back 5 years, gain 5 years of experience through back testing. It's not going to give you the same experience as trading live, but it's going to give you perspective. It'd be the equivalent of reading a book on marathon trading, right? Not the same as you actually running it, but at least you're gaining some insights on what to do, what not to do. Hey, Akil, don't go out in 7-minute pace for the first mile. Oh, yeah. What do you think the third way is, right? 1 is trade live only, just go out and do it. Don't train for the marathon, just show up and run. See if you make it. The other way is do your back testing on it. Read, watch movies, watch videos, right? The third way is a blend of both. Gain your experience through reading, through watching videos, you're quote unquote back testing for marathon training, but then by actually doing it as well. So now you have the learned experience and the actual experience combining together. Read up on what you need to do and then actually do it. And that's going to cut down on that learning curve. The third way is don't run marathons. You're making me scared to go live. Well, yeah, it's scary, but you gotta do it. You gotta do it if you want to achieve your dreams. No different from any business owner. The first time you take that business loan, right? The first time, if you're taking a loan out for your business, the first time you sign on that dotted line, you're taking a loan and the guy's smiling at you like, oh, you're gonna owe us so much money. But you're banking on yourself. It's scary, but you got to trust yourself. You got to trust that this business is gonna work. It's gonna pay off. And same thing with live trading. Now with you guys, you guys have the benefit, and Trump should be speaking right now. Here's the benefit that you guys have, right? We're not selling you a dream here, right? Have you ever heard any of us say, oh yeah, just trade live, you're gonna be a millionaire right away, right? How long how long do we tell you should typically take? Yeah. What do we say? Anywhere between 6 to 18 months, guys. Well, why would you tell someone that? Well, that's the truth. Now, everyone's different, but typically between 6 to 18 months is when you really start to find yourself as a trader, right? You can be successful, right? But typically it starts off as like being a little bit successful, kind of just like going up and down, right? Where you're like you're making a little bit of money, but you're kind of just breaking even, just like a business, right? If you can break even in your first year in a new business, God bless, you're on the right track. And then you go from breaking even to kind of like making a little bit of money, nothing special, but you know, you're making 1% a month. You had a 10% year, which is nothing to get crazy about, but you know, it's 10%, right? You're doing just as good as your investment banker, right? Your mutual fund manager and whatnot. And then you start to really find yourself as you gain experience, as you take your back tested experience and you combine it with your live experience in the market. About a year and a half in, it starts to click and you really start to find your groove. You start to find that you're seeing the markets differently. You start to find your strategy. You're making the adjustments necessarily to trade it, and you're locked in, and then you start to really see it. Then that business starts to boom. Now you're trading in the zone. And yeah, it took you a year and a half, but it's because of that combined experience. If you didn't have that combined experience, it might have taken you 5 years. And I'd much rather be in the market breaking even for a year than losing money for a year. Would you guys agree? But it's having that combined experience. And George said, the SMB guy, Mike Belfiore says 1 to 3 years. Yeah, I truthfully believe that. It took me about, I always say I say 2 years, but it's probably like a year and a half after I started trading the right way to finally kind of get in my zone. And I say 2 years because, you know, I do things in quarters, as mentioned earlier. So like, once I was trading good, I'm like, well, this can still be an anomaly. So let's give myself another 6 months to really say it in my head. But it's a process. But I think the best thing you can do is understand the process. If you understand what it takes, then it eliminates some of that frustration. You hate to say it, but it's like if you're a rookie athlete, if you understand that the rookie season is going to have its ups and downs, you're not going to be a superstar right away, then you can approach it a lot differently than, you know, having the expectation that I'm going to come in and be a super trader right away. Because when you have that expectation, there's really nowhere to go but back down, right? If you start all the way at the top, at least mentally in your mindset, there's nowhere to go but worse. And that's not fun. That's not fun. All right, well, that was interesting. I don't know where that rant came from, but yeah, let's go to our next pair. Any questions on euro dollar? There's not much happening here either. We're going to go to euro yen next. This coach is on fire. This coach is on fire. I just saw you type it in, yeah. That'd be my thing if I was doing this live. It'd be like I'd have one of those Hunger Games suits, and as soon as I do like any type of hot take, it just flames up. Fuego. I'm literally up there in flames. And then it turns into a Richard Pryor situation, and that's something nobody wants. All right, euro yen. Euro yen. Let's go to euro yen. That'll make for a good podcast episode or a video or whatever I want to use it for. That will be fun. All right, euro yen on the daily. We had a similar situation to the euro dollar. We had that ascending channel which fell. You can see that currently we're working on. Well, we've basically made up all of the losses from yesterday. So yesterday we had a nice engulfing candle on the euro yen. Today we've made all of that up. I'm looking for a breakout to the upside on this pair. We'll see that clearer as we go down to the lower time frames. But you can see that we're currently retesting previous structure highs. Now, this is a decision point, guys. I love these points in the market because it's going to tell me what I need to expect, right? If we hold this market, or if we hold this level, I can expect a potential structured trade to the bearish side. If we break this level and it gives me, or violate it, it gives me a higher high, higher close, and I can expect a continuation higher. And the question is, if we get a continuation higher, where are we likely to continue higher to? What would you guys say? Ooh, what you say? Ah, I hate that guy. Gosh, why did we bring him up? I want to punch his face. Naomi's got her beef. I've got mine. No, not your face. Jason Derulo's. Punch his face. Raymond says 123, $1.23. L says 123 as well. Let's measure that off. 123 even. Psychological number right at previous structure. Yeah, I think it's a decent location. Now, normally what I would do here is I would pull a few of my analysis tools out. Right, we look at an equal measured move. I don't think we're gonna get an equal measured move up there. Now, AL is telling me otherwise. It looks to be a little. Oh, you never know. Yeah, 1-to-1 measure move is gonna be a little bit long, but actually right at the top, not too bad actually. I thought it would be far beyond it. But yeah, 1-to-1 measure move up there. Right, let me just check. I believe this is going to be 2. We're not going to have the 618 retracement for a Gartley, right? Yeah. I remember looking at this earlier. Yeah. Yep. Yeah, so not a Gartley for me. The C leg's not going to be deep enough. But we can bring in a Fibonacci extendo as well. Fibonacci extension tool from the swing low to swing high. Right, again, we have a 127 right around that 123 level. The 1618 is going to be a little bit higher. You have this 1414. Again, I don't personally care about it. If you do, that's going to line up basically with your 1-to-1 measured move. But we got this 127 up here. We could even take a Fibonacci inversion, and we should get Gabby's 1618. I'm calling it because I can see it. My RAS is trained to the max. Boom. Boom. The data is much different. Let me just reload. I've had some data issues lately. Let me just reload. But yeah, you shouldn't get a 1618 Fibonacci extension up there. 1618 is going to be much higher just by the length of this extension. I'll check on TradingView. It just, the laws of physics wouldn't be physics, but the laws of ratio shouldn't give you a 1618 up there. But let me just double check. What are we on, Euro yen? Yep. Let's see what TradingView has. Yeah, same thing, 1618 up above structure. So check on that. Check on it. But yeah, so we have a nice little zone here. We've got a 127. Right, basically in between this zone, I have all my confluence. I've got the 123 even handle, 1618 inversion, 127 Fibonacci extension. If I'm looking to dial in on a kind of the specifics of a zone that I need to be concerned about, it's going to be right in here. So what we're doing is basically just predicting on where we think price is likely to go, right? So we're working in advance, and none of this matters unless we get the higher high, higher close. But if we get the higher high, higher close, then that's where I would expect the market to go to. And you do have some minor levels. This 127 extension. This is gonna be a minor level. You can see price react at it previously. This is essentially the low of this channel, this structure channel up here. And you can see we have a doji and a good hold right here as well. So 122.68 should be taken into account as well for a potential level that price can stop at. But yeah, if we are looking for a breakout and a continuation up to that level. So this is something that's probably going to be a better opportunity on your lower time frames. So we'll take a look at your 60s and your day trading time frames. But that is an opportunity that is on my radar. Again, waiting for a violation of this level, if we get that, and then looking for a continuation higher. If you're a breakout trader, you can trade the breakout and trade it on its way out. Wait for the breakout and the pullback, and look for that type of opportunity here as well. But a decent opportunity here on the euro yen, and this can be again a short-term intraday opportunity on your 60-minute chart, or it could be a kind of a day trading opportunity on your lower time frames as well. But pretty decent opportunity there on euro yen. Any questions on euro yen before we take our first break? You even have a little bit of an yeah. Wait for the breakout, in my opinion. Again, there is the short opportunity. I don't see it having much legs, but that is an option. If we hold that level, you could look for a double top or some type of reversal type of trade in this opportunity, and perhaps a move back down to about 122. So that is an option. You can keep an eye on that too as a counter trend trader. Just see something real quick. You already had a double top appear in a violation, so that's going to be hard on the 15. All right. We did pound dollar, euro yen. It said a nice high and tight flag after breaking structure would be great. Would it ever? Yeah. Would it ever? I'd take it. Hey, Pete. All right. Let's take a break. We'll come back. Let's just wait 1 minute first. We have do some news coming out for the dollar in about 1 minute. So let's just wait and see that first. See what effect that has on the market. I don't think it's going to have a massive one, but let's just see. It's core durable goods. All right, you see a little bouncy bounce, not too much. All right, let's put 13 minutes on the clock. And Trump said on next week he'll make a huge announcement. Does that mean much coming from Trump? I feel like everything is a huge announcement. I don't know how I want to take that. Should I actually think it's a huge announcement? I feel like everything is like to the extreme. Yeah, how are you gonna make an announcement to announce your announcement? We'll see what he says. We'll see what he says. Gabby says, New Zealand dollar at an interesting level. Not very tradable for me, but still interesting. Kiwi. Can't complain about that, even though I already did. But, yeah. All right. Take 13 minutes. See you guys when we get back. All right, traders, back for round two. So far, we had two pretty good rants this morning. I took a look at pound dollar, euro dollar, and euro yen. Euro yen is holding that level we talked about. If you guys remember, I wanted to see a break in close. I'd rather see a violation. But we do have a hold of that level. And price is starting to make its way down. However, not a bad thing to see some yen strength. Hopefully that will take the pound yen trade into targets, which it is very close to doing. I'm going to stop talking about it before I jinx myself, because targets aren't at a great location compared to previous structure. But let's look at New Zealand dollar. The Kiwi. Gabby says Kiwi at a nice place, but nothing tradable by her means. Yesterday we had a bat pattern on the Kiwi, which got a target ones hit before continuing higher. Let's take a look at the daily and work our way down. George says, I have a feeling the euro is going to go down to do what I want it to do. Unfortunately, it does not look like I will be involved. Now, if we take a look at the Kiwi and we walk through our process, identify, predict, decide, execute, what would you guys say we are doing here on New Zealand dollar? Not a bullish rotation. Nope. Nope. We are currently testing a previous level of structure here on the daily. So similar to what we're looking at on Euro Yen, where we're at a decision point. If the market holds this level, we could see a reaction to the downside, just as we're seeing with Euro Yen. If we violate this level, we could see a move higher. Now, tricky thing about this level is we do have an even handle right above it. So it may be a little bit difficult to project how higher we're going to go if we do see that explosion. You can see that, or that breakout. And you see that even handle level is going to be right near previous structure high. So not a lot of room for expansion in my opinion, but this is a slow moving pair. And a higher high, higher close would definitely signify a move up on this pair. Come on, one more pip. Just go down one more pip. Selfish. Yeah, I'm not. Yeah, I needed one more, George. Selfish. Stop selling. Stop taking profits. It's making it go the opposite way. Come on. All right, so let's go down to a 240 on New Zealand. On New Zealand dollar. You can see currently retesting previous structure highs, holding that level. Again, if you're looking for a short opportunity, you can look for an opportunity at structure to get short. A little bit difficult to make profit projections, in my opinion. But if you are, two places I would look for is a retest of this level right here, 6660, or you move right down here at about 6632. Let's head over to the 60-minute chart here on New Zealand dollar. Gives you a clearer picture of how the market is slowing as we come into previous structure. Let's go down to the 15. Let's go down to the 5. Any questions about New Zealand dollar? There we go. Thank you, Pam. There we go. Now I can join the fun, George. Now I can join the fun. All right, let's go to pound yen next. Just working our way through the normal rotation. Actually, well, no, we don't need to look at pound yen. Pound yen's already in play. Let's go to dollar yen. If you guys are new, I don't like looking at trades that I'm in, even though this one just hit target 1, so the kind of the best part has been taken out. But for me, there's nothing I can do in this pair right now because I'm already in the trade. Plus, I don't like looking at charts. I don't like looking at P&L. It just drives you crazy. But a little bit easier once you've gotten target 1s off the board and you've gotten your stops to break even. But let's look at dollar yen here. Dollar yen, right? We're seeing a engulfing candle today. Yesterday we tested our lows down at $1.07. You can see the rejection down there, followed it up with a higher close. Remember, dollar yen is in that situation where it's a trend continuation, but not. It's a tough trend continuation opportunity, where technically we've made that lower low, lower close. We're retracing back up in the previous structure. However, hard to predict where that trend is going to end because of the very large wick on the daily chart. You can see here on the 240, we're retesting a previous high outside return. We could be setting up for a reversal. We could be setting up for a breakout of this level. We could be setting up for more of a classic reversal pattern in the sense of, say, a head and shoulders, something like that on dollar yen as well. To get that head and shoulders, it would mean that we need to see another pullback, one last test. The market fail to create lower lows or equal lows, and then start seeing a rally up in the opposite direction. Even with that, it's hard because our inside level of structure is right here. So even with that, it's not the greatest, in my opinion, it's not the greatest opportunity to look for a trade. And that's how kind of yen's been lately. It's been kind of just blah. Let's go down to the 60. Yesterday. Hats off for you guys that took the trade on the 15-minute chart. That is a trade that we looked at in the live room. Remember, we had an interesting conversation about how time frames make a difference. For me, that was a pattern on the 15-minute chart. So guess what I couldn't do? I could not take a trade on it because my day trading hours were done. But it did work out as a very nice target one bat pattern winner on the 15-minute chart. I saw traders bragging about it on the chat in the afternoon, and I felt pretty bad about myself. I said, that's not fair. I identified it too, yet was not able to get involved in it due to that time frame. And that's part of setting your business plan, part of setting your time frame. Yes, I closed the room. Yeah. I should have just, you know what I should have done, George? I should have opened the room. And then taken it and justified it by saying, well, the live room was open. Never mind the hours. The live room was technically open. So that's what I'll do. That'll be my go-to. That said, pound New Zealand long doesn't look bad. Make sure you give us a time frame latch. That way our traders know what exactly you're talking about as far as your pound New Zealand long. All right, let's go down to, here's the 60. Again, a clear view of that potential head and shoulders. If we come back down to test that level, again, the issue with this is going to be the follow through. The issue with this is going to be the follow through. Where are you projecting the follow through to go to? Last says any time frame from the daily downwards. See, that's tough, man. So like a long looks good on the minute chart. All right. I'm just trying to help the other traders out in the room. You got to give them more information than just say, hey, euro dollar long. Because depending on what time frame you're looking at, it could be different perspectives. A minute chart can give you an entirely different perspective than a daily chart. Does that make sense, right? It could be a beautiful shorting opportunity on a 1 minute chart and a great buying opportunity on a daily chart. So we want to make sure that we identify what time frames we're looking at, because depending on the time frame, your perspective may shift and your view of the market may shift. Gabber says, I instantly ignore that info since it's not significant. I'm trying to give you pairs, then you explain I'm playing the lazy game. Well, it doesn't help me explain either if you don't give me a time frame. I'm more in tune to ignore it that way than look at it. There's a secret for you guys. If you just shoot me, hey, this looks good, I'm more likely to ignore it because there's no specific time frame than actually look at it. But if you give me a time frame, then I'll know. And more importantly, it helps our traders out. No, but seriously, it doesn't, it's no different than someone, you get this on like Twitter all the time where it's like, yeah, euro dollar looks good for a long. And it's like, well, what, or euro dollar looks bullish. And it's like, well, what time frame? Because we know how fractals work, right? We could be in a bullish trend on the 60, but then maybe a trader's a monthly chart trader. He's like, no, man, we're in a big downtrend on the monthly, and then you guys get into an argument where like, no, euro is bearish, no, euro is bullish, it's bearish, it's bullish, it's bearish, it's bullish. It's like, well, it's both. It's bearish for you, it's bullish for you. Oh, yeah, you're right. Because no one ever asked what time frame looking at. So it is important. It is important. It is important. All right, let's go down to the 15 here on euro dollar again. Once again, you see another ascending channel breaking down to the downside. Again, there's just not much here on this pair, to be honest with you. Not much here on this pair, so we'll work through these. Let's go dollar Canada. We're going through my pairs in order today. Usually I'll go through kind of ones that I have on my radar. I didn't have a chance to look at any of the kind of the ones outside of my portfolio this morning. That's why we're not doing any of those. We can look through those later, but only chance I had today was look through the pairs that I actually trade. Dollar Canada. Here on the daily, Gabby says I'm long Canada. Icky trade, but the rules are the rules are the rules. Dollar Canada dealing with multiple levels of structure, support. Right, you can see some of the analysis we did the other day. There's an AB equals CD pattern a little bit lower than where we're currently trading at, near the $1.31 level. What you see on your chart was an example we looked at yesterday where it's, when you're dealing with multiple levels of structure, overlapping levels of structure, it's often hard to set up your risk reward because you're either going to have two scenarios. Either you're going to have a risk in a place that is risky, riskier than your normal risk, or you're going to have to lengthen that risk in order to avoid another important level of structure. And it's a tough scenario, especially knowing that the lower level of structure, the one that's furthest away, is typically the more important one. Now, dollar Canada came down here and we just started consolidating. We just started doing the sideways shuffle. So the market has no idea what it wants to do. When I see something like this, I'm inclined to think that we're more likely to continue lower than higher. Why would you guys think that? Or why do you guys think I would think that? Lower highs is one, yep. But think of a more general principle. But lower highs is definitely one. How it forms is very important. Yeah, just like in real estate, right? Good deals don't last in real estate. If there's a good deal on the table, it's typically gone before it's even on the table. Learn that lesson the really hard way, multiple times. But same thing in the market. Your most important levels, price tends not to hang around there that long. If it's a very important level or the buyers are very interested at this level, it's not going to kind of mosey on and create lower highs and kind of hang around there. You're going to see a reaction. You're going to see a wink, touch, and run. Sounds dirty. But the fact that we're kind of consolidating down at this level shows me that there's indecision. There's not a lot of buying pressure because we haven't been able to put in one higher high and then we've refused to do that. So we could see a continuation lower. Now we could channel and we could violate it, and we're not saying every time it happens this is the case, but in my experience, this is what you tend to see at these levels. And news aside, it wouldn't surprise me if we broke down to the downside and really went to this next level. And I'll tell you what, from an institutional standpoint, what the institutional traders are trying to do, they're trying to probe and see where the interest is at. So you'll see them kind of probe and try to figure out where the interest is at. And if it's not directly there, then it's like, hey, let's get our money off the table and find the spot where it is interested at. So you see that as well in a lot of these pattern formations. But let's go down to the 60-minute on the loonie here. What do you have? Canada news tomorrow, if I remember correctly. Is that right? GDP for Canada coming out tomorrow? No, USA GDP is tomorrow in the G20 minute. Canada GDP is Friday. Okay, so US is tomorrow. Canada's Friday GDP. All these funny names. GDP, RMPI, IPPI, core PCI, core PCE, PMI. Makes you sound fancy to your friends. That's the key. If you're a trader and you trade fundamentals, you just use any 3 letters and you'll sound like a genius. Well, I did check the IML the other day, but the RSI was close to the ADX with the MAC touching the PCE of the IRS. Oh, what was that number? Met forecast. Yeah, they forecasted the ABC at the EBF and the AWZ. What'd it do? Met forecast. Trader life. It's like when I used to try to memorize all these candlestick formations so I can sound good on the chat. Oh yeah, we got a dark. Anybody see that dark cloud cover? What is it, raining? No, it's a candlestick formation. Those were the days. All those candlesticks learned for no reason. All right, 60-minute chart, dollar Canada. 15-minute chart, dollar Canada. 5-minute chart, dollar Canada, sold. Let's go over to Aussie dollar next. If you guys have pairs, some of the minor pairs, again, I haven't checked them this morning, so I don't know what's going on. But if you have minor pairs that you want to take a look at, feel free to shoot those in. We can jump over there. It's funny. It was a very slow day in the market, but I've had a lot of trades. I've had 3 trades this week, which isn't normally something that you brag about. But given the market conditions, 3 trades in a week is massive. It's funny. I'm looking at it like, man, this has been a busy week. How many trades have you had to kill? 3. Ooh. Been a massive week. Massive week of action. Told you summer was picking up. It's funny because usually I used to average what? I'm used to averaging probably about probably at least like 4 or 5 trades a week. 5 trades, 5, 10, 15, 20. Yeah, 5 trades a week usually. 20 trades a month on average. And of course, sometimes you have busy periods where it's like 10 trades in a week, and then a period where it's nothing. But yeah, I mean those are the times that we're in right now of low volatility. All right, Aussie dollar will be quick because we're still in the middle of no man's land. And for you guys that are new, we do a process called IPDE: Identify, Predict, Decide, Execute. We're essentially asking ourselves, is the market in a location that we care about? That's basically a simple way of looking at it. Is the market at a place that we care about? And seeing how I am a structured trader, I can easily look at this chart and I can tell you no. And this is the cool thing about when you become comfortable with your trading style. You can really tell if this is a trading opportunity for you or not. And when I look at this on Aussie dollar, I can tell that we are not quite at resistance. We are far away from support. We're not really at anything that I care about. So when I do this analysis in the morning, it can literally take me a minute. I can literally go down to my charts to say, okay, nothing there. Hit down to the hourly, nothing there. And it allows you to spend more energy on the opportunities that you care about. So, Let's go to Aussie Canada next, which is actually the last one in my portfolio. Then we'll go around some of the minor pairs. AUD, CAD. Aussie Canada. You can see bouncing off of previous structure resistance there around 91 cent. Coming back up into our previous new structure low, that blue line. One of those trading situations where we're stuck in the middle, where we're stuck between previous structure support and previous structure resistance. Let's see if the lower time frame gives us a clear opportunity of what or if we can expect anything. We do have a small head and shoulders pattern forming with a inward slanted neckline, which I guess, would be like this. However, we have not broken that neckline. If we do violate, the next level I would expect us to come to is going to be right up here around, well, we have 92 even handle, which is going to stand in the way. But it come up to retest previous structure highs. Let's go down to the 60-minute chart. Gabby says, I'm looking for a 26.18 the short. Previous structure highs, we got a big 60-minute chart, big nothing burger. 15-minute chart, even nothinger. And on the 5-minute, wait for it, nothingist. So 0 on my radar here on Aussie Canada. Let's head over to TradingView. Let's see if we can find something interesting to look at on some of the other pairs I look at. Did you guys have a boring day on your market as well when you did your top down this morning? For you guys that do top down analysis? Yeah, not a lot here, which is not a bad thing. Let's just scroll around real quick. Euro Aussie here. Interesting hold on the Euro Aussie. You can see we've come down to retest previous structure. Yeah, that's the thing. The stuff that was interesting was stuff that we were already in. Interesting test, really good test on Euro Aussie here on the 4-hour. Nice pin bar doji here at previous structure. Bigger picture Euro Aussie, if you guys remember this pair. This is the one where we're kind of in between everything, right? We're in this big wick. We've just broken previous structure highs. Market's trying to figure out what it wants to do. Now, I'm personally not interested in any type of longs. I still have no reason to think price is more likely to go higher versus lower. And if we do go higher, there's going to be the next place is going to be right in this level. So there's not necessarily a lot of room to go higher, especially if you're waiting for a higher high, higher close candle. But in its own right, this would be a nice sign to look for a reversal. If this were a pair that was at a better level, a higher high, higher close after this type of two candlestick combination would be a very positive sign. But it just happens it's just in the wrong location. Now you go down to the hourly, right? You do, perhaps, maybe. You got to check. You may or may not have a higher high, higher close there. So that may be an entry reason for you. Again, however, the room in which you're looking for targets is just so, for me, it would be so small. So it's a good example of a very nice candlestick. Just not at a place that I have any interest in. Not at a place that I have any interest in. And you got to remember, it's not the what, it's the where. Not the what, it's the where. All right, Pound Aussie. Pound Aussie, similar situation. Retesting previous structure lows. Let's take a look on the daily, see what Pound Aussie is doing. We go to that IPDE process. What would you guys identify here in the Pound Aussie? Where are we trading at? 123 for the timer. 1, 2, 3. Mos Def and Talib Kweli. Yep. Previous structure. There goes your hip hop reference song for the day. George has been keeping track. Previous structure. Yep. Keep in mind if you're looking for any trading opportunities, the lows of this structure are a little bit lower to previous structure levels. But yeah, we're at previous structure lows right here. Just like Euro Aussie, could be an opportunity for a buy, a structure-based buy. Go down to the 4-hour. RSI is dipping under the 20 mark, showing us that it's oversold. Close to getting a double bottom here. Not your greatest looking double bottom, but close to getting a double bottom here on the hourly. So double bottom traders, if you look for a double bottom at structure, here's an entry reason for you. Once again, the issue is going to be where are you looking to take targets at? I see zero reason to expect a continuation across this vast land. But perhaps you move up into this level. 182.20s is something that can be predicted. Looking ripe. Man, I tell you what. I was so mad at my wife the other day. So she took the kids had a play date, right? I had the house to myself on hold on. Let me make sure she's gone. Give me a second. Keys. As I was saying, as the confidence now flows through my voice, knowing that my wife is not in the house. I was so mad at my wife the other day, right? So, kids had a play date. Kids had a play date. Ain't it funny how I come back so confident knowing she's not here? Kids had a play date, so I had the house to myself. On this had to be Monday, right? House to myself from probably about 1:30 on. Kid went to a piano and he went to a play date. And so I'm doing stuff. I'm working on the course. I'm doing some trading stuff. Watching some Better Call Saul on Netflix. And, I do some other stuff, cleaning the house. I make dinner, right? I found this new local food stand that sells, vegetables real cheap. That's one of the things I love about being out here is, I got, 3 zucchinis for $1, all this fun stuff. Got some cantaloupe. So I'm making dinner and I said, you know what? Usually she's the one that does all the fruit. I buy it. She leaves it out there. She cuts it. I said, I'm gonna do something nice. I'm gonna cut this cantaloupe. I got these two melons. I'm gonna cut these 2 melons. Right. I'm gonna have me a delicious, nutritious, healthy snack instead of eating like a brownie. Because I told you before, I think I'm becoming allergic to eggs, or the eggs that we have are bad. But I haven't been able to eat eggs that we have. We made brownies with the eggs, and those made my stomach hurt too. So, hope it's not the case. But I cut them up. I put them into 2 bowls. Right. One of the cantaloupes is really ripe. It's good. It's ready. It's juicy. You're cutting it, and the juice is flowing out, and you're like, ooh yeah. The other one, not as much. It happens, right? It happens. So I have a little bit of cantaloupe that night. And I'm talking about, I fill a whole bowl. I have a little bit of cantaloupe that night. Usually eggs are my go-to for breakfast every other day. Right? And so I'm up in the morning and I'm like, all right, I'm not going to take a chance with eggs, right? I'm not ready yet. I'm going to give it some time. Or get some new eggs first. What can I have for breakfast? What is healthy? Because I'm trying to lose some weight, right? And I say, I'm gonna have some Icelandic yogurt, right? When you're fancy, you do that, right? You buy Icelandic yogurt. I'm gonna have some Icelandic yogurt. I'm gonna make a little fruit bowl. I'm gonna have some of these very juicy cantaloupes, and I'm gonna have some grapes. And it's gonna be a healthy breakfast. And I open the fridge. I wish you could see my face when I open the fridge, right? Because I know which bowl has the good ones and which bowl is the ones you'll eat but you're not really excited about. And I'm looking in there. We have all this food in the fridge. And I'm like, I don't see it. Where did I put it? Okay, maybe she put it behind the pasta or the vegetables and moving stuff around. I'm like, I do not see it. And I'm like, did she leave it out? Did I leave it out? Like where could this fully stuffed bowl of cantaloupe go? And I make my way to the sink. And what do you think I saw in this sink? What do you think I saw in this sink? I see the bowl in which I put the cantaloupe, and it's empty. It's empty. Now keep in mind, right? This is the next day. Like the next day. It wasn't like it's been there a week, right? You know the rules of my house, right? If you can't leave stuff in the fridge that long, but it usually makes it more than a day, right? And so this is like 7 o'clock, like 6:30 in the morning. Right, I go stomping up to her room. Right, I go stomping up to her room. I don't know what I'm gonna do. I'm in like a rage. I'm like, if she's sleeping, I don't know if I'm gonna wake her up. If the kid's sleeping, I don't know if I'm gonna wake him up. I'm just going. I'm gonna figure it out on the way, right? I'm a rookie trader. I'm just gonna figure it out while it's happening. I go up there and I give her this look. And I don't know if you guys ever seen like the Kevin Hart memes. Let's see if I can bring one up. I'm gonna show you the look I gave her. What if I just Kevin Hart face? It's the classic Kevin Hart meme. Yeah, it's this one. Here we go. This is the look I gave her. I said, babe. I said, I already knew the answer. I said, babe, you eat all the cantaloupe? I already knew the answer. I just wanted to hear what she said. I just wanted to hear her response. I want to hear her justify it. I said, babe, you ate all the cantaloupe? She looks up. She's half asleep. She said, yeah. I said, it was a full bowl. And then she tried to blame it on the kid. Well, me and Jaden were snacking on it last night. I said, I went to this face. Where's the other face? I said, really? I should have did it in the Kevin Hart voice. Really? You ate all the cantaloupe? And I proceeded to stomp downstairs and eat my unripe, unsweet, hard cantaloupe. Crunching and stuff. Ridiculous. Less than a day, OG. The whole bowl. The whole bowl. Ruin. You guys don't understand. Like eggs are there's not a lot of stuff I like to eat for breakfast. Like eggs are a go-to because it keeps me full. Like cereal and stuff doesn't keep. I don't like cereal. I like cereal, but not every day. Hot cereals, cold cereal. And I woke up and I go to bed. I think about food. I'm hungry all the time. I go to bed and I think about what I'm gonna have for breakfast. That's what gets me to the next day. And I was so excited because this cantaloupe was so sweet. And I took my time. I cut it myself. I scooped out the innards. I sliced it up real nice. I was ready. I was ready for this cantaloupe. I had the Icelandic yogurt all ready. I was gonna take the slices, gonna put it in the yogurt with the grapes and have a nice little nutritious meal. Feeling good about myself. And it was gone. It's like when you have a trade and you wake up in the London session and the move already happened, you can't get involved. That's how it feels for me. For you guys trade the London session, you have an advantage. For us here that do not trade the London session, we go to bed hoping like, please don't let London move it. Please don't let London move it. Please, I've been waiting for this. Please don't let London move it. You wake up, you storm downstairs, and it's like double top RSI divergence. It rolled down like 100 pips. Son of a, you couldn't wait? You couldn't wait another hour, London? You had to move it at 4 a.m.? You couldn't wait till 5? Big old bearish candle. Right what you needed. Big old bearish candle. London, and then everyone's on the chat. Hey, how about that trade this morning? FTB. Come on, man. Couldn't wait an hour? Nick said, try trading for California. Yeah. I can imagine how people, the Aussie and New Zealand, well, I guess they trade through the London session. Australia and New Zealand. But yeah, California, you don't get anything. Shoot. Moral of the story is, buy yourself a small refrigerator, put it in your office, and next time you make cantaloupe, you keep the bowl to yourself and don't tell anybody about it. Can't believe she did this. Bad thing is, I'm not sure if I made her feel bad because I don't think she's touched the second container of cantaloupe. So either she feels bad and guilty because I was really upset. Rarely do I get upset, but I was really upset over this. I'm not even joking. I'm not sure if she didn't touch it because she knows I was upset and she doesn't want to feel like she eats all of it. She's been eating a lot lately. Like she's been like a garbage disposal because we have a kid that's still feeding, so she's got to, he eats more. The more he eats, the more she has to eat. So she has no choice. So she's been eating everything. So I don't know, either she feels bad or it's because this cantaloupe is crunchy and she just doesn't want it. I don't know. So I hope she doesn't feel bad. But part of me is like, nobody wants this crunchy cantaloupe but me. No, she does. She look. She eat. Look, she's the one that says it. She eats like a garbage disposal, but she loses weight. And I try to eat less or eat the right things, and I'm gaining weight. It don't make no sense. Now some of it's muscle. I've been in the gym getting swole. But she'll put stuff down and she'll lose weight because I mean my youngest he's always on there. He's attached to the boob. He's everything she eats he's eating, and plus he's eating normal people food. This guy look. We're at the point for you guys that have kids. You notice I have to hide my food again. I have to hide my food. Maybe you guys have dogs the same way. I'm serious. I have to sneak and eat, man. Like that Kevin Hart face I just showed you. Like whenever someone brings out food, he makes that same face. Like he can't talk yet, but he looks at you wide eyes, extra cute, and he's like, "What you got?" And he starts crawling his way over. All you hear is, right. I started eating on. We have like an island in the middle of our kitchen, so instead of eating on the couch where he can reach it, because he'll just come over and just grab a handful. I started eating higher up so he can't get it. And I just start feeling this pull on my leg. And I look down, little cute puppy dog eyes. And it's got like 4 teeth. And I'm like, man. And he just puts it away, man. He'll eat half a plate. I'm serious. I'm not embellishing here. He'll eat like half your plate. And I'm very, if you guys can't tell, I'm very stingy with my food. Like, I'm not the type of person where, like, we go on a date and it's like, hey babe, can I try some of yours? I'm like, no, you should have got your own. Like that's the type. If you wanted it, you should have ordered it yourself, or I will order it for you, but don't eat my food. I'm that type of person. I'm very stingy with food. Like, don't eat my food. This is my food. Go get your own. So like, I understand as a father, you're supposed to do this, but like when he eats half your plate, it annoys me. Don't eat half my plate. But he's so darn cute, man. So you got to give it to him. Yep, that's a dude thing. Don't you want to know? That's Prince. I mean, I don't. Are you guys like that? Or are you kind of like, if you go on a date, are you like, I guess it depends. Like a bite is fine. Don't get me wrong. Like a bite is like, oh, hey, baby, you want to try this? That's fine. I'm talking about like, I've been on dates before where he's like, hey, can I try that? And she like houses half your plate. Like she's like, ooh, that's good. And she takes another fork bite. Ooh, that's really good. And she starts dipping it in your sauce. And you're like, you got your own. Or you try to throw out hints. You want me to order you a side of this? So I don't mind like the bite. I try to offer like, hey, this is really good. You want to try it? Because maybe next time you can order it. Maybe next time you would like to order this. Next time. But the ones that keep going back for more, right? You gotta. It's going to turn into a sword fight. You see that fork reaching across, got to block it. You got to block it. All you hear is a clank, clank. Can't tell you the times I've gotten in trouble at a restaurant. Sir, can you guys please stop playing with your utensils? We're not playing. I'm just putting the block on. It's like the end of a soccer match where, we're keeping the ball in the corner and we're just protecting it. That's what I'm doing with my food. I've got it at the very side of the table, back to it. You can try to get to it if you want. Good luck. There you go. Welcome to my life, guys. Welcome to my life. Anyway, always place a stop loss when you take trades because that's the safe thing to do. All right, now we made it trade related. All right, let's finish around. Let's finish these charts. Let's see if there's actually anything going on here. I skip down to what Aussie Canada, yeah. Euro New Zealand. Here we go. Potential. This is when you got to check your 50% leg here on Euro New Zealand. But potential bat pattern here forming. Real quick, I just want to check on Euro yen before we do anything. We are seeing a move here. Okay. New Zealand, right? Yeah, Euro New Zealand. Potential bat again. Check that B leg. Make sure the 50% is hit. If it is, and if you're seeing this as a X to A, you're gonna have a potential bat pattern like this. Again, two things. Make sure that B leg hits. Make sure this isn't X to A for you. You're not looking at this as two separate moves, but you could have a potential bat pattern there on Euro New Zealand forming. Aussie yen, Canada yen. Canada yen's going in the wrong direction. I'll tell you what, if you're a butterfly trader, depending on how you trade your butterflies, it's always an iffy pattern because there's so many ways to trade it. Do any of you guys have interest in butterfly patterns? It's never something I've invested time in teaching because I'm not a big fan of it. Mainly because there are so many ways you can trade it. And you'd really have to test the rules are so vague for it, kind of like sharks as well. I think the shark pattern has like a million rules. But this would be one where if you do have a butterfly pattern completion, obviously depending on where your decompletion is at, you do have the luxury of having structure looking left. So typically and the butterfly is a really good pattern, guys. It is a very high percentage pattern. The problem is the location, the fact that it completes after the violation of a trend. And there's typically no safety net up here for stops. So that's always, from a philosophical standpoint, where do you put stops at? That's a toughie for me. But in this one, you do have the luxury of structure looking left. So this would be a decent butterfly. Yeah, I mean, I like the philosophy. I did a little bit of study on butterfly patterns. Give me 1 second, guys. Hold on. I like the philosophy of butterfly patterns. It's basically you're playing the end of an extension. So you're playing that the market has violated X, the structure. It's broken out, and then it's exhaustion, right? The big breakout move has ended, and you're looking for a little bit of a retracement. Now, if I were to trade it, the ideal way to trade it isn't back to the 3D2, but it would be back to the X leg. Now, the problem with that is, if we just measure this out, I'm going to throw two risk rewards on there for you, right? Let's just say our risk is above the stop loss here, or above the structure here, right? Right above there. 3D2, you're looking at something like this, right? A return to the X leg, you're looking at something like this. That's the main issue. But that is the most efficient way to trade it if you want like the highest win percentage, in my opinion. Now, if you are interested in trading something like this, what would you have to make sure of if you're looking to trade it kind of the secondary way? You have to make sure you have a very high win percentage, right? If your risk reward is inverse, you have to have a very high win percentage to make up for it. So you'd probably have to hit this pattern this way, probably at least. It obviously would depend on what your average risk reward was, but I'd say probably at least like 65%. Probably similar to kind of like the cipher. You need to be like 60 to 70%, anywhere in that range. But this will be an interesting one because we do have structure looking left, so you do have a valid location in which to place your stops at. All right. Oil coming up in the previous structure here. We've come down, we've consolidated, we've broken and closed above. Remember that consolidation came right back down to our shoulder line. If we can break this level, right? If we consolidate and break up once again, we'll probably return back to that 64 level. See you, Latch. On oil. So. All right. Anything else you guys wanna look at? Slow day in the market, but we made the best out of it with 2 good rants and 1 interesting rant. Nick says pound yen. Sure. What would you like to see on pound yen, Nick? Gabber says no. We done. We did not do. We didn't do. No, we don't. Oh, we didn't do pound yen. No. But what question do you have on it? And I can address them for you. Look at that big wick. Gabby, you scared him away. You scared him away. 4-hour rejected off a structure. Want your read on if it will trace to 135.80. Well, the easy answer is I don't know. But that is my answer. Yeah, I mean, right now we're trading in between previous structure support and resistance. So if we go down, that would be the area I think we go down to. Will we go down versus going up? That I do not know. So I right now I can't say. There's nothing here that shows me or tells me we're more likely to go up versus down. But if we do continue down, that would be the next holding point. If we do continue up, this would be the next holding point before eventually at some point we would have to break this range. But yeah, we're flirting in the middle. I hope we do go down. Selfishly and personally speaking, I would rather see us go down than up. Because I would love to get a target 2 hit, but yeah, just from looking at the chart, I just don't know. Yeah, but I would rather see us go down than up. We'd probably stop a little bit before that level. We'd probably stop a little bit in here, first and foremost, about 136.13, 136 even around that area. But yeah, I hope we go down. Yeah, I'm in the bear bat. Yeah, bear bat. Yep, hoping for some target 2s. I don't think it's going to make a difference with my overall decision. I think that's too far gone. Yeah. But we'll see. Yeah, bareback. Yeah, 3. Man, all pattern trades this year. Most of my trades this year. Well, it doesn't surprise me. Most of my trades are always pattern trades because I trade 3 different patterns. But yeah, a lot of pattern trades this week. All 3 of them are patterns. Avery says potential bull Gartley on the hourly for Bitcoin or pound yen. Pound yen 135.38. Avery's looking at this. Let me know if this is what you're looking at, Avery. X to A to B, B to C, C to D. Yep. So if you have this as a pattern on your radar, put it on there as well. By the way, you may be hearing a lot of noise in the background. Well, I guess only tomorrow, because we're not here Friday, but they're chopping down the jungle that we have growing around our house. After 3 years, they finally convinced us. Three years. Bitcoin, Bitcoin, Bitcoin. So if you hear any like wild animals screaming, that's what it is. Oh, we did break that structure on Bitcoin. Look at that. So continuing to the moon. Continuing to the moon, yeah. Not 4 hour keel weekly. Bitcoin bulls are back, guys. Bitcoin bulls are back. All right, I will close this down. I will get this recording up to you, and I'll see you guys tomorrow. Take care. Don't tell my wife.